and welcome to Fintech Insider Inisghts. My name is David Brear. I'm the Group CEO here at 11FS. In today's episode, we're examining why we need to start pulling these services back into financial services. That might seem strange given the services is literally in the industry's name, but at 11FS, we believe there is a real service gap in the industry where companies have fixated over products or customer numbers or data rather than the customers themselves and fundamentally how best to serve them. It's also something we often talk to our clients about, and today I've literally come off the back of having one of those conversations, and myself and Ewan have had many of these over the last month as well. And it's one of those ones that when we see a pattern, when we see consistency in those conversations, that we want to open up that conversation to you, our listeners. It was the fundamental of why we started the podcast in the first place. So what we're going to be doing, we're going to have something of a bit of a fireside chat today. Neither of us are actually sat by a fireside, unfortunately, but what we're going to be doing is trying to unpick what we really mean when we say that services have fallen out of financial services. To have that discussion with me, I'm joined by Ewan Silver, who's the Group CTO over at 11FS. How's it going, Ewan? It's great to, it's a bit weird, isn't it? I mean, we have these types of conversations all the time, but now we're going to give the listeners a bit of an introduction into this as well. But speaking of introductions, do you want to introduce yourself?
Yeah, hi, David. It is kind of weird. I don't think you and I have ever actually done this formally on a podcast before. Although, I mean, I don't know, we do it like multiple times a week, right? So I'm, as you said, I'm Group CTO here. So my job is to basically run all the engineering teams, help deliver all the products we build, and also hopefully change a few people's minds when we talk to exec teams and other things around the world.
Very good. And I guess, diving in, because actually, this one is one that's so close to really what me and you do, Ewan, on a day-to-day basis. If I just give a bit of a short overview of actually really the conversations that we have. And I say, I literally had a conversation with a bank from overseas that was in the UK today. I sat down with their board and their CEO and pretty much had this exact conversation. You get pulled into a room and they go, okay, what is the future of financial services? And as we say, I mean, spoiler alert, it is services, right? It's actually about really thinking about what has fallen out of the industry. What are the things that actually fundamentally were the things that actually made the industry great? What were the things that actually created the deeply empathetic, the warmth, the creative engagement that customers really needed? And fundamentally, that's people. The thing that actually made financial services successful was people, because financial services is a very boring, a very acronym-heavy industry that actually becomes very difficult for normal people to really engage with. Normal people on the street, I don't mean you listeners, you guys are fintech nerds, you know this stuff, it's difficult, people use acronyms to avoid talking like normal humans, right? So, but for customers, then financial services with percentages and APRs and all of the complexity of all of these terms is really difficult for people to get their heads around. Now, the challenge is that the investment in digital has actually digitized the industry. It isn't about the creation of new ways to serve customers. Actually, the investment in digitizing the industry has been about taking people, taking paper, taking premises out of the equation. And really what that's done is it's taken that warmth, it's taken that human experience away from people who fundamentally need that. In a world of actually cost of living challenges and problems across the world, whether it's, from a political perspective or, otherwise, then actually people need support, they need help, they need guidance more now than ever before. So with all of the investment in digital, are we really in a better place? And actually our argument is that we're sort of not. As we at 11FS often say, the gap between the financial instruments that people are providing to people and the customer's actual problems are widening. And that is a real challenge. Like I say, with inflation or energy crises, that service gap is becoming more and more significant. And therefore, the gap of really what traditional financial services needs to be, what it really actually means to be a financial services organization, is ever more important, but ever more missing in that agenda. The flip of this is we've got big organizations who are incredibly risk averse, who are trying to change their cost structuring and actually have become almost inhibited by the very things that made them successful over the last 200 to 300 years. And this is difficult. This is hard problems. This is structural change. This is not just a technological conversation. It is a fundamental rethink of actually what financial services is there to do. So, when we sort of trivially say the future of the financial services industry is services, we do understand how deep-seated that change is. But what we want to do today is dig a little bit more into that. We want to dig into the technology. We want to dig into the operations. We really want to try and double-click on it and actually maybe help a few more people. Where you and me and you talk to a lot of people on these ones in this sense, but the more people's brain gets a little bit rewired with this different way of thinking about it, the more actually fundamentally the fabric of financial services will be benefited. So with that long-winded introduction, I'd like to dig a little bit more into this. I mean, what does the technology mean? What does the operation mean? How does that fundamentally rewire what it is that financial services is there to do? And we're going to get stuck into that. But first, a few brief messages. Don't go anywhere. Hey folks, we have super duper exciting news. The shortlist for this year's 11FS Awards is officially live. We asked you, the incredible Fintech Insider community, to help us choose the deserving winners of the 11FS Awards, and your response was outstanding. You voted in record numbers, and it's now time to see if your favorite fintech companies made the shortlist. With a total of 10 different awards up for grabs on the big night, including categories like Best Experience Design, Fintech for Good, Best Use of AI, and Consumer Game Changer, there is a lot to look forward to. Don't wait, explore that full shortlist now at 11fsawards.com. That is 11fsawards.com. And be sure to stay tuned to all of our channels to find out who will take home one of the coveted 11FS Award trophies on Wednesday, 15th of November.
Hello, it's Benjamin here, Director of Research and Strategy at 11FS. Earlier this year, we published Building the Future of Home Buying, a report that calls out financial services for making the biggest, most significant purchase of most people's lives way more difficult than it needs to be. Well, fast forward to today and things haven't changed. Mortgage offerings are more important now than they have ever been, with sky-high interest rates in many countries forcing home buyers to shop around. We've got clients asking us how to move quickly to fix the problem and get a game-changing product to market. Want to know the secret? Step 1, download the report at 11fs.com/homebuying. Step 2, get in touch at 11fs.com/ventures. Speak soon.
So I guess, look, Ewan, we've established this is quite a big topic, right? And actually, I mean, the next sort of 30 minutes or so, we're going to try and unpack some of those pieces that are there. I mean, the ultimate future for financial services is services, right? We're moving away from those dumb products. We're trying to bring about contextualization. So, I mean, what do you think to that? This is sort of the conversation we always have with people. So jump in. I know you've got lots of opinions.
So, I mean, as you said, we talk to a lot of people all the time. I think you and I have probably had this conversation 4 or 5 times with different clients this week, all around the world. I think the fundamental problem with banking is that it's set up with banking products. Bankers have for the last 50, 100 years, or whatever, they know the products that they're selling. They're banking products, they're siloed products, they're retail accounts or mortgages or credit cards or so on and so forth. And, the organizations are set up around that way. They're set up, it makes sense from a regulatory perspective, it makes sense from an accounting perspective, it makes sense from a legal perspective. And actually it made sense probably 20, 30, 40 years ago to do it that way. But actually it doesn't make sense anymore. I think people have lost sight of, you kind of said it to the empathic and human element of it. People have lost sight of the fact that actually customers don't want to buy a current account or mortgage or whatever it might be. We always talk about that job to be done. But the underlying systems and the underlying operational processes and the underlying governance processes just aren't set up that way. I think that the primary driver that we see is an old-fashioned technology law called Conway's Law. And Conway's law basically talks about the fact that it was set up by some hippie in the 1960s in Stanford, where computers were just coming. It was a bit of a joke, to be honest. He didn't really meant it to be taken seriously, but actually he was looking at the way that computer systems were built, and he realised that computer systems that were built by one team tended to be monolithic. Computer systems that were built by two teams tended to have separate compartments, and actually he realised that your organizational structure drives your architecture, and your architecture drives your organizational structure. And banks, I think, have got into this weird hole where they've ended up these silos, said the retail systems and the commercial banking systems and the credit card systems and whatever they might be, and everything's set up that way. And that's then driven an architectural choice. But the architecture needs to change, but it can't do that until the organizational and process changes take place. So the two things are the yin and yang of the same coin, and they're stuck.
Yeah. And I guess in that guise, I mean, you sort of, I mean, it seems mean, but you sort of get what you deserve to a certain degree, don't you? But I guess the objective has shifted, hasn't it? If we go back to why, again, the sort of pursuit of digitization within big organizations was kicked off, every digital transformation program, the ROI fundamentally was taking paper out, right? And really what we've got to is now a kind of a world of self-service. We all have an app, we all have a bank, we all have a statement on a mobile device, but that isn't service, is it? And the danger with that, as you say, the removal of those sort of, fleshy, empathetic things that used to frequent branches. I mean, the problem with losing those guys is actually the customers are essentially exposed to the technology. And I guess with that regard, this narrative and these conversations, seem to resonate not just with small building societies in the UK or, giant ones in the US, but equally like huge banks with these global presences, because I guess it comes back, and you said sort of the monolithic setup. To your point around your operation denotes your technology. Well, really, like the operation of the P&L structures of organizations, the way in which they budget, the cycles in which they budget, the setup around the financial instruments around them, they have created these top to bottom monolithic structures of technology and people and process. And that becomes really almost an impossible mission to evolve from, isn't it? So it's a funny one, because we often sort of say is like, you can see why people have got here, given the decisions that they've made and the increments that they've made. But actually, they've sort of painted themselves into a corner, haven't they?
Yeah, they have. And it's not just, you shouldn't sort of be hitting just on the banks, although they are culpable for a lot of this. It's also the vendors. The vendors are selling these types of systems. And then, vendors are selling it because the banks want to buy it. The banks are buying them because that's what the vendors are selling them. And so it's a symbiotic thing. But actually, the base level setup is it made sense 20 years ago, 30 years ago. But to me, it doesn't make any sense anymore, because I feel like banking is actually relatively simple at the end of the day. If you really take it back to its core, it's about effectively three things: storing money, moving money, lending money. And the difference between a retail bank and an SME bank and a credit card and an overdraft and a £100 million corporate loan, those differences are not at the base level of the banking operations. They're at the top end of the jobs to be done. Now, the difference is in permissions. Who can do what with this loan? What is the term of the loan? Who can access this account? How does money get in and out? How does it flow through these systems? And banks, I think, they've fundamentally lost that understanding of what are the core axioms of banks. What we would call the base level primitives, and that store of value, the payment rails, and then all the high level permissions and so on and so forth. And by joining those things together, that is how you should be creating products that then resonate with what the customer wants. Because, you're inside the bank, you see a retail account or you see an overdraft, and that's what you sell to the customer. But the customer wants an amalgam of these things. They kind of want the retail account and they kind of want the overdraft, but they want to do something else with it. And they can't do that. And, we talk about a layered diagram, sort of the sort of value at the bottom, then the rails, and then moving up into higher level intelligent digital services and, jobs to be done, so on and so forth. And I think that banks, they need to fundamentally step back, look at actually what is happening with regard to, these core level axioms. Actually, you should almost have like a single store of value that you can then build multiple propositions on top of: your retail account or your corporate account or your expense account or so on and so forth, because they are basically the same thing. But because banks can't do it, they're not set up that way. The governance processes and et cetera aren't set up that way. They're pushing forward this monolithic mindset. And until you really step back and say, why are we here? What are we actually doing? It's only when you do that and you look at it, you think this makes no sense. Then actually you can move forward. But that's a big step for a lot of people because it forces them to actually question a lot of what they think is reality, and it's not.
Well, and that's the challenge, isn't it? Is that, every organization is just a manifestation of the people that were in the organization, right? And often, as we say, the organizations have become successful doing the things that they've done, albeit the market conditions, the market itself has dramatically changed. But you sort of almost kind of you've got to look at the symptoms and then look at really what the disease is, right? Because, this manifests itself in big organizations and small organizations in pretty different ways, right? I think there'll be a lot of people kind of listening to this on a train going into work into one of these organizations somewhere around the world at some point. And actually you'll recognize this because actually you will spend more time on strategy than you do on execution. Because actually your technology systems are set up in a way that actually it's so hard to do things that you spend so much time on strategy to ensure that you're doing the right thing because actually executing is difficult. We often sort of say, in fact, I think it's a t-shirt we often wear to these meetings to sort of hammer home the point, which is ideas are easy, but executing is difficult, right? And I'd say probably, you and your background with sort of Nutmeg and Betfair and these things, I don't think this is not hand wavy, oh my God, we're so gushing over microservices or event driven or oh my God, jobs to be done is so amazing. Fundamentally, the only sustainable advantage businesses have is to find market opportunities and execute them quicker than competitors, right? This really is what we're pointing at, is if your technology doesn't actually allow you to do that, and actually you're not able to provide those services, then fundamentally that puts you at a real disadvantage. There's only sort of one direction of travel when it comes to, hey, I can't change products quick enough. Hey, I can't evolve my customer experience. Hey, I can't atomize change. That's a real issue, isn't it?
It is. And as you said, it's like, guys and girls come in on the train in the morning, whether they work in the smallest banks or the very largest tier one global banks. We've literally spoken to half a dozen people this week, ranging from the top tier ones right through to the very smallest building societies in the UK. They all have the same problems. And for me, it does come from this fundamental organizational technology structure. I think that people are missing the fact that part of the problem, I think, with architecture is it's done by architects and technology is run by technologists. And a lot of these guys, and we've heard it multiple times this week, the problem with the technology guys is they're concerned about moving from version 15.2 to 17.6 or something like that. But actually, that doesn't really change anything. It's a system upgrade. But architecture for me is it's holistic, it's systemic. It's looking at things across the entire organization. Your technology architecture is fundamental to your organization and your regulatory architecture. It's why I start with Conway's Law. It's why we lead with Conway's Law. It's why we'll end with Conway's Law. They are the same thing. And actually, it's all very well beating up the technologists and saying, oh, the architects don't get business. But by the same token, the business guys don't understand. And I put business guys with quotation marks, so I hate that phrase because everyone's a business guy. But, the business people, they don't understand that the capabilities that everyone has, they abdicate responsibility. You shouldn't be doing that. And I think that, what's needed is you do need to pare it back to the very basics. But actually, when you look about how you build up products and capabilities to move quickly, it's as I said before, a store of value is a store of value is a store of value. Sure, it'll differ if you're dropping onto a large core system inside a big tier one, or you're using an e-money license in the UK to spin up a fintech. But at the end of the day, it's somewhere to store money and money flows in and out. That doesn't differentiate your bank. Where you differentiate your bank is at the very top. It's in that it's in that experience layer. I don't want to call it experience layer because people think that's UX. It is this amalgam of permissions, who can do what with it, what are the loans, where does the money come from, and that ability to orchestrate it. We talk about sort of a financial operating system, and that metaphor I think is good because if you look at banks, they've historically welded all of their business processes onto the very thing. at the bottom of their organization, which is the core system, which is very analogous to what happened in the computing world in the 1950s. That sort of big white screen, computer, the $6 million man, and the guy, the people in there, they're always men who wore the white coats. And if you wanted to change anything, you had to, change the hard drive in that machine. You had to rewrite the entire stack, which is exactly what happens in a bank. But nowadays, people don't care about what hard drive they're running on there. You can tell me what hard drive on your Mac is. You'd have no idea because you see Mac OS. And actually, the hard drive is analogous to your store of value, to your monetary system. It's critical. You can't lose your data, but it's also irrelevant because what matters is whether you're running Slack or Zoom or whatever app you're running on top. I'm running Brear here as a browser. That allows me to differentiate it. And actually, for a bank, that ability to drop in a new browser type, I go from Brave to Chrome to Edge or whatever it might be, is easy. That's what differentiates the proposition. But they fixate on that low-level capability and miss the fact that actually it's commodity and the proposition is much higher up the stack.
Yeah, and actually to your point, the thing that actually is missing, we talked about the point around self-service now not being a service. Well, actually, in days gone by, the interface was the human, but actually now exposing those stacks to customers and allowing themselves to serve themselves is not leading to great outcomes, is it? Particularly in a world where we're seeing, financial education never make it onto the curriculum anywhere around the world in a major way. We're seeing people's level of understanding of financial topics get to, an all-time low, to the point where we're seeing people, getting real good chunks of their financial advice from people on TikTok. Like, that's not a good thing to do, is it? So, but I guess in that sense, we should say, and I'm always kind of empathetic to how we got here. The idea of coalescing people around problems to solve within an organization, pulling people together for focus on savings accounts or focus on current accounts or focus, sort of made sense in that world where actually ultimately the arbiter of the experience was a human who could straddle all of those monoliths and orchestrate that service for the customer. But what we've sort of seen in this world, and actually, the amount of, robotic process automation or, bizarre big bang transformations we've seen fail from core banking systems perspective is really that monolithic structure and the exposure of it to consumers. This really becomes the, albeit I can get why we've got here, that really becomes the biggest problem that banks are facing into, isn't it?
Yeah, as you said, they because they've been so sucked into the machine, they can't see the wood for the trees. And then if you said to a banker that, I say banking is trivial, it's storing money, moving money, lending money, the bankers on the other side will go, oh my God, this guy doesn't understand what he's talking about. Doesn't he understand how hard it is, et cetera, et cetera. It is hard. It's hard if you're doing it in the way that you've always done it. I get that, right? Because you've got old systems and new rules come in, and so that you can't change the system. So you have to put humans over the compliance thing, which then means the guys and the girls in the branches can't make any new products, etc. All of this overhead, all this compliance work is, it puts a stop to the bank. And that's why I keep coming back to the fact that if you fundamentally relook at the way how a bank should work, and a lot of these systems don't really exist because it's not in the vendor's interest to sell you systems that allow you to build stuff together as a bank because they want to lock you in. When you procure a system, you as a bank have all the economic advantages. As soon as that deal is signed, it all goes to the vendor. You cannot change it.
And I guess just touching on that, Ewan, because obviously, we've talked a little bit about big banks here, but sort of focusing, I guess, a little bit on the smaller organizations, the community banks, the building societies, because I guess in the old world where essentially the small banks would look up to the big banks, arguably the worst thing that the small banks could do is try and build a bank like the big banks, right?
Yeah, because the business model for a lot of the vendors is large upfront license fee and then an ongoing sort of pay-as-you-go type costs, and that makes sense for a big bank who can afford it. But if you're a small bank and you've got a technology budget of 150, 200,000 pounds a year or whatever it might be, I'm talking about a small builder society. You can't afford these systems, and nobody is out there helping them running these guys. So they're almost running on Excel and other capabilities, Excel is fine to some degree, right? But, trying to get past the regulator, it isn't going to work. So there's nothing in the market that really allows people to straddle that capability. And so the small banks have to follow the big banks, but it's a fool's errand. They don't have the budgets, they don't have the scale, they don't have the capabilities, they don't have the people really to be able to put to these problems. And so they need to do something fundamentally different. So I think that, I'm a Formula One guy, so going a bit left field here, you're like, okay, where's he going this one? It's sort of, if you're Williams at the back of the Formula One grid, you can't race the same way that Ferrari and Mercedes and Red Bull do. You have to throw something different. And so the only time that Williams ever get good points in Formula One at the moment is by playing a different strategy. And it's the same with the smaller banks. They cannot play the strategies of the big banks. They have to do something different. And I think, a smaller bank, weirdly, is potentially in a slightly better place because they don't have as much of the overhead that the large, you're a large tier one in 60 different countries. Geez, you've got a problem, right? Because you've got to change 60 different systems globally. It's probably like 180 different systems globally, just for ledgers or whatever it might be. So actually, the small guys, they're suffering because they don't have the scale. But actually, that's probably an opportunity because they don't have the scale.
Yeah, it is slightly perverse, that, isn't it? That almost on the banking battlefield, the small banks should be looking at the fintechs for who they want to be when they grow up from a technology perspective, but actually retaining their independence and challenger status with the brand and the origin and everything that they've done, isn't it? But as you say, I mean, it's an exercise in decision making for the smaller organizations, but for some of the bigger banks, more global, more countries, more problems, more systems. I mean, who really? I'm always very terrible with like racy models, like who's responsible and who's accountable, but I don't know if anybody can actually make that change really happen, because it isn't one decision; it's something like 700 decisions across all of those different geos, and that becomes almost a kind of a Gordian knot of a problem that everybody will recognize, but nobody will actually be able to do anything about.
Yeah, and I guess that stems from the fact that banks are designed to not take these risks. It's designed to you require 700 people to say yes, but only one person to say no. And I do actually agree that I think if you're trying to change a large bank internally from insides, that's almost impossible. I don't think anyone's ever actually done that, which is why you are seeing even now banks they need to spin out some kind of greenfield capability, right? Build something properly from scratch. I look at a lot of banks. I sit down and think, why are they not building wholesale banking capabilities that offer out these almost like pseudo fintechs and then allow your propositions to sit on top of it? So, you look at banks, they're weirdly inverted. They have 100,000 different low-level systems and a monolithic sort of brand at the top. And actually what they should really have is 3 or 4 monolithic core capabilities, stores of value, money movement capabilities, identity, so on and so forth. And then 100,000 different propositions over the very top of it. And I think getting there, it's that age-old adage of, if you want to get there, don't start from here. I think that applies probably in the big banks. I don't think you'll actually be able to change the core of that bank. Put something out to the side, but have then proper capabilities, proper governance, proper investment to say this is where we are going to have to go, and it will be the future. A lot of products you can sunset over time, cards, accounts, loans, so on and so forth. The ones that you can't, longer term loans, actually, you can migrate those relatively easily because there's a lot of them, but they don't change very often. But before you do that, you need to really step in and look at what are the core capabilities I need at the very bottom of the bank to allow the very top of the bank to be able to move as quickly as it can.
It's an interesting one, isn't it? The more you sort of go through these things, and I know, at heart, you're obviously you're a CTO, you're a technologist. Technology actually isn't really that much to do with this problem, right? It is a symptom. It's not a disease. Like the disease is actually the operating model of large organizations, and it's the project mentality of chasing features and, feeling like those things are going to be this time it's going to be different and this time is going to be a real benefit, rather than creating really a sustainable operating model. I'm always a big fan of, and it's interesting how many times this doesn't land from an international audience perspective. So does everybody know Bananarama is usually like a question. And I'm like, the song that they had of like, it isn't what you do, it's the way that you do it, right? So many of these services that we're talking about, Ewan, are not just about the services to customers. Absolutely, we think the orchestration of people's financial lives and those intelligent services to bring about context to financial products is important. But the most important services is actually the services to your internal audience. It is that operating model. It's the ability to make product changes. It's the ability to evolve these things. The technology is just what allows that to happen. But actually, the organizational governance needs to be so good that that is something that is encouraged rather than, protecting people from it.
Yeah, I 100% agree. I think the technology is irrelevant. I mean, you hit the nail on the head with the project. Banks are obsessed with doing projects. They think that's the most efficient way of delivering capability. And you could argue it probably is on a per project basis. But what it means is that you then set something up and no one ever really thinks about, all people care about is hitting the project delivery timelines. Nobody ever cares about actually creating a viable long-term business. So you try and minimize capex, but then your opex just goes through the roof. So the number of times we've talked to CIOs or whatever of large tier ones around the world, and they look at it, think, I've got an OPEX explosion here. I've got 50 projects in different countries, all have basically built the same type of capability because it made sense for them. And now I've got to run 50 systems with 50 OPEX budgets, and it's just madness. And then actually these systems, they don't have anyone properly looking after them. So I was talking to a bank, actually Tim, who works for us, we were talking about one of his previous experiences on the technology floor of a large bank, and he was like, actually, you can see some of the core systems are owned not by the bank employees, and they're not funded by the bank employees. They're funded, they're looked after by an external consultant because that's put in quotation marks cost efficient. But these people are not. That's not how you would run a startup. You should almost imagine each of these projects as a startup with its own funding model and own governance model, and actually even looking at its own customers, because then actually there is an incentive to the people inside these teams to actually improve it. The way that banks currently work, there's no incentive for anyone inside the project to do anything other than hit the timeline and then basically get put onto another project. Knowledge is lost. And so you end up with 1,000,000,001 different systems that nobody's really looking after. The OPEX is through the roof. And you then wonder why you're slow.
Is that really, when we get down to it, again, it's actually down to, is everybody aligned around the same problem? But arguably, I guess in terms of, the sort of misty mountain of the horizon that we're talking about. And again, look, this is not, hands wavy, just can't we help customers? It's like, actually, this makes total business case sense, because the idea of contextualizing your products into services makes your services much more efficient at being sold. But actually your services then are defending your commoditization as an industry, which is a hugely sensible thing as well. Any industry that's been commoditized, we've seen, really negative outcomes, mobile network operators, various, internet providers, like all different types of things. If you can't differentiate and provide a real service, your customers become incredibly price sensitive, and then actually all you're doing is commoditizing yourself. But on that incentive part then, Ewan, and again, we often say this, it's like every organization is just what everybody does every day. Is this almost a bit of a watershed moment when it comes to actually, rather than the whole bank having one objective, then actually that layer diagram you referred to earlier on, whether it's people looking after the basics, the underpinning rails, where they have to be, lean and mean, and the objectives are around service. They're providing services to their own organization. They are an outsourced but insourced capability. People providing financial products, that product level, the sort of, how do I make sure that actually we've got the best processes to update, create mortgages, create current accounts, intertwine these things and make them work. And then actually you've got the services layer above that. I mean, all of these things have got slightly different objectives, haven't they? I know Jason, when we often talk to people about this, likens it to a restaurant. the people in the washing the pots have got different incentives to the people who are cooking the dinner, and different to the people who are serving the food, different to the manager on the front greeting you when you get there, right? They're all there for the same objective overarching, but the fundamentals of what they do on a day-to-day basis, and therefore the objectives and the requirements around them are really different as well. So I guess taking that into the banks, like this capabilities level, the new layer view, it sort of feels like that's a shift in the way in which big organizations need to be structured as well.
Yeah, it's fundamentally a shift. I mean, we did some work last year with a North American client, and they were looking at a new credit card system. And the obvious thing for everyone to do is go out and do a vendor assessment, and what's the right credit card system to work, and et cetera, et cetera, et cetera, what every bank would do. And the question I asked is, why are you putting in a credit card system? Why didn't you build an internal Marketo or an internal Stripe or so on and so forth? And it would probably use the same underlying systems, but the mindset of how that system would be set up is fundamentally different. Because if you're building an internal Marketo or an internal Stripe, because all they're doing is processing, etc. Marketo and Stripe don't sell whatever the underlying vendor system is. They sell that service, and the project is the governance model is set up that way. The funding model is set up that way. Because if you think about it, if I'm building a bank for, say it's a bank, and I want to build on top of, I want to launch quickly. As a startup guy, we would go out and find a BaaS supplier in some way, shape, or form that would allow us to move quickly. Banks don't do that. Or, small banks will do that, and we talk about sort of the small credit unions and the mutuals and the builder societies, and actually the early days of Starling and so on and so forth. And probably not Starling because they built their own core, but Monzo and Revolut, etc. They went and launched on top of a new money license. But if you went to a big bank, they try and build it on top of their core systems. But actually, what they should be building is effectively an internal Stripe or an internal Marketo, or if it's for identity, it's an internal Onfido or an internal Alloy or so on and so forth, who then will allow you to build your other capabilities on top of that. You've got standardized APIs, you've effectively got standardized pricing, you've got a set of people whose job it is not to expose the underlying technology, but to build a set of capabilities that allow the other people in the bank to do what they need to do. And I think it's weirdly, you probably end up using the same technology, you probably end up using the same people, but the OKRs or the KPIs that actually that team are now working to are fundamentally different KPIs to the KPIs that you would have if my job is to keep XYZ system uptime with 99.99% and low latency, etc., etc. You're now there. The metrics about how do I allow someone else to build a product on top of me very, very quickly. Subtle, but fundamental.
Yeah, I think it's almost just getting down to everybody in an organization needs to understand who do they serve. And I don't mean that from a, hey, build my pyramid type way. I mean, from actually, you're either a serve to the business or you're trying to serve a customer. And arguably, they're both part of a bigger pipeline that achieves both of those things in that way. But it goes back to that metaphor, doesn't it, about, fishing rods and fish. Actually, most organizations' transformation programs and the projects that are within them are there to create fish. They're features. They're chasing a thing that they won't meet in the market. Whereas actually, what we're talking about is the building of capabilities to allow them to really understand what fishing's like. And we're probably going to have to wrap up, Ewan, I'm afraid, because we wanted to kind of give people a little bit of an insight into some of the conversations that we're having, and we'll be back and doing this more frequently with you guys, because it feels like the market's at a really interesting turning and tipping point for really people kind of getting this. It's a funny one when we say the future of financial services is services, and that is really services to the organizations, the employees, and fundamentally those customers that way as well. The first way, and I always sort of joke about this in any speaking thing we're doing, is the first way to really get to that point of understanding this, and really the first step in any great 10-step program, whether it's Alcoholics Anonymous or Weight Watchers or anything, you've got to admit that there's a problem. And actually, I think if we admit that there's this problem and really focus around solving this problem, then ultimately organizations get to a much better place. But, admitting it is difficult, but is necessary to get to where we need to get to. All right, on that note, we are going to have to wrap up today's discussion, though. So thank you so much for joining me, Ewan. Where can people learn a little bit more about what you're up to and reach out?
Well, I tend to hang out on LinkedIn. So if you find me on LinkedIn, otherwise the usual 11fs.com site that in the podcast that you know so well, David.
Very good. All right, folks, you can find me over on LinkedIn. Do you know what? I'd love to hear your thoughts on this one, because essentially it's a conversation that we have so frequently that actually I love to kind of get people's feedback and kind of get into conversation about it. So feel free to DM me on LinkedIn. Look forward to seeing what you think. Thanks for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us make it better and helps other people find the show as well. As always, if you want to join the conversation, you can find us on social media. Just search for 11FS or Fintech Insider. And if you really want to, you can email us on podcasts@11fs.com. Thanks so much for listening, guys. Speak to you soon. Goodbye.